Welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, zinniawealth.com, Zinnia wealth.com. That's our website. Tool around there. Find out more about Sharice. There's a button there. It says complimentary retirement consultation. If it's time to talk about your retirement, click on that and we'll get that going. Well, we have talked about Tony Robbins, and he's got a book called Money Master the Game. He's written a lot of books about money, and he's been talking, as he gets older, a lot about retirement lately. Mm-hmm. And he talked about the 401k. A lot of times he talks about fees, but this time he said this: the 401k has potentially hurt Americans' chances to gain wealth. He sees some warts in the 401k, and he said you need to use it correctly. So he gives you 3 ideas here. Number 1, just save up to the match. After that, it's up to you. If you have a Roth 401k, go all in. And then he says if you have both, use both. But I have some questions about that as well. Sharice, the 401k, I got to believe that most of the people that walk through your door, that's where they have most of their money. Are they using the 401k correctly? I feel that if we didn't have it, I don't think a lot of people would save. I don't think a lot of people in their 20s and 30s and 40s are going to go out there and develop a Scott account or a Schwab account, and they're going to go, all of a sudden become a day trader. That just doesn't work. So most of us are very simple. Put the money in, talk to me in 20 years.
Yeah. No, there's some value to that, because that is absolutely right, because bad behavior comes from no behavior, and no behavior is more bad behavior. And Tony Robbins, I know he listens to my show every once in a while. He should really pick up my book sometime, because everything he says, we have said over and over and over again over the last, I don't know. What are we on? 12 years?
12 years, yeah. Coming up on 13.
He's like, dang, that girl, she's so right. I'm going to have him on my show one day, you guys. I'll mark my words. I might be 80, but we'll see. He'll be like,
we'll get him.
I need to get on a show. Let's try that, girl. So anyways, 401k. So I love a 401k because of what they are for. You're right, Randy. If a company is going to offer you a 401k and you're picking jobs and another company does not offer you a 401k, I'm probably going to go with the company who offers the 401k, because you can put a little money in based on your paychecks, and then hopefully that company will match you. It's like getting free money. So 401ks, though, they turn into this massive ticking time bomb in the future. You have this major debt that you owe, and you have a partner in your 401k, and it's called Uncle Sam. And 40% of that 401k you saved for, let's say you saved $1 million, you can basically say close to $400,000 to you, your surviving spouse, and your heirs is gone. Yeah. So that is what he's talking about. And that is an absolute true statement. So I do say, if you only can get a 401k at your employer, only contribute up to the match, the free money they're going to give you. Okay. Any dollars that you can save there after, I would go get a Roth IRA. Like, you can come into us, we can do a Roth IRA, and you can put money inside that Roth IRA every year. There's a limit to how much you can do. And then if you make too much income, we're in over 100,000 and lots of change, you can't contribute to it. So there are some rules. But let's just say you go, all right, Sharice, so my income's a little too high. I put the money into the 401k up to the match. What is the next best strategy? The next best strategy is a brokerage account, because a brokerage account, when you're in retirement or even in your younger years, is more tax efficient than having a 401k that's going to be taxed at a higher marginal tax bracket, as long as tax brackets continue to go up and the taxes go up, assuming all things, that is typically what happens. The brokerage account, you can do tax loss harvesting. We do it for our clients every year. You can take income without, paying taxes if we do that, and 8 out of 10 times. And then if you do have to pay taxes, I'd rather you pay 15% capital gains tax versus 22% marginal tax rates. So I like that strategy. You go with your 401k up to the match, get a Roth if you can, or get a backdoor Roth, which is something we'll talk about one day. And then the remaining money, get a brokerage account, right? So that is one thing that you can do. But I do want you to ask your employers, well, you got this 401k. Do you happen to have the number 2 Tony Robbins is talking about here, the Roth 401k? Because every dollar that you put in goes into this Roth and it grows tax-free over the next 30 years of your life. It's amazing. And then the matches can also, from the employer, go into the Roth. But the difference is that you don't get a tax write-off. So let's say you're making a salary of $200,000 and you want to put $25,000 into your 401k. Well, you get to take that $25,000 off your income. So that $200,000 is now $175,000. But if you put that $25,000 into a Roth 401k, you don't get that extra write-off off your income. So sometimes there is a time and a place for a Roth, and that we do a lot of Roth conversions once people are in retirement and they typically have a lower income. That's a good time to do it. So again, it is not cookie cutter. I tell people this all the time. It's a one-on-one conversation we all have to have with you to see what works best for you. But I do love the Roth 401k as an option, because you might be somebody who's like, Sharice, okay, I'll do the 401k and then I'll come in and do a Roth with you and then I'll do a brokerage account. But if you are somebody that says, I'm not going to do that, Sharice, then I want you to save. No matter what, just save. Just know you got a big partner of Uncle Sam and the big ticking time bomb, because your $100,000 is going to go to $1 million one day, and your $1 million is going to go to $2 million one day, and then you're going to owe a lot of taxes, and so are your kiddos and your spouses. So there's so many ways that you can do this, but de-risking your taxes is a big part of what we do here. And we want to make sure that you are making those decisions on how much to go into your 401k and then how much to go into a Roth and how much to a brokerage account. Because even though you don't understand it right now, you're really going to understand it when you retire. And you can ask all the retirees that are retired today, like, I wish I would have done that. They always say that, by the way.
So if somebody is listening to us and they're in their 50s and 60s, and you know as well as I, there's some fat 401ks out there. There are people that have $1 million, $2 million in a 401k. Would you look at them and say, you have enough in this tax-infested bucket of money? Now it's time to move over to something else, be it brokerage account, be it a Roth 401k, be it your own personal IRA. Do you say at some point that there's enough in that bucket and that's going to cause us a lot of problems later, so let's move someplace else?
When people come in with $2 to $3 million in a IRA and 401k, I absolutely whip out that tax plan and show them their future. Mm-hmm. I will show them over the next 30 years, if you do nothing and you just live off this IRA and you take your required minimum distributions that Uncle Sam says you have to take, and then you pass this to your spouse, and then you pass this to your kids, well, here's the big tax bill based on today's taxes, not what the taxes could be in the future. And then I show them, what if we took $3 million and we rolled half to an IRA? How much does that change your tax burden over the next 30 years? It is an astronomical difference, Randy. And then we'll show you, what if you did it all, right? And it is an astronomical difference. There's hundreds of thousands to millions of dollars left in a tax-free status to beneficiaries, depending on how much you have saved. I don't know anybody else that has a software that can show it the way that we show it, but a lot of people are always wondering, well, what is the difference? How can I see that? That's what we're going to provide you when you come in. We do need your tax returns, though, your most recent one, of course.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Sharice Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed.